Hello viewers, I Nishant Sharma welcome you all to part first of the topic sources of business finance of the subject business studies. In this chapter, in this topic, we are going to explore the meaning, nature and importance of business finance. We will also understand the various classifications of the sources of business finance. We will understand the merits and limitations of the various sources of business finance. Then we will identify the international sources of finance, and lastly, we will examine the factors that affect the choice of an appropriate source of finance. So let's just start with the meaning of this term business finance. Just suppose you have a restaurant and you want to expand that business for which you need money. So this money which you need is actually the need of your finance, which is required for your business purpose, and the manner in which it is to be raised is also part of the business finance. Now you may approach some of your family members or maybe your relatives or maybe your friends, or you may approach to some funding institution in order to raise this money. The way you need money or finance to expand your business of restaurant, similarly other business organizations may also need business finance to purchase fixed assets, maybe to meet their day-to-day expenses, to meet contingent requirements, to fund their own business growth, to bridge the time gap between production and sales, and lastly to avail of the available business opportunities. Just like a human body needs blood to function, a business organization needs finance to function. And we can say that business finance is the blood of any business entity. Now, starting with the types of the needs of the business finance. So, there can be two types of requirements of business finance. Firstly, we can have the fixed capital requirements and we can also have the working capital requirements. Fixed capital requirements are meant to finance the fixed assets of the organization, like if you have to purchase land or building, plant and machinery, furniture and fixtures. So the amount of capital which is required to finance these fixed assets is called the fixed capital requirement. On the other hand, when you need the capital or the money to meet your day-to-day needs, to meet your day-to-day expenditures, to finance your current assets like stock of material, bills receivable, and to meet your current expenses like payment of salaries, payment of wages, payment of taxes and rent, then these expenses amount to be called as working capital requirement. Now starting with the classification of business finance. So business finance can be classified on certain bases. The first basis that we have is on the basis of period. On the basis of period, business finance can be of three types. It can either be short-term finance, medium-term finance or long-term finance. If we talk of short-term finance, this is the finance which is required to meet the day-to-day expenses of the business organization. For example, if you need to purchase your raw material, you need to make payment of wages, of rent, of insurance, of electricity and water charges. All these expenses are to be paid out of short-term finance. And for short-term finance, one may resort to trade credit, loans from commercial banks and from commercial papers. Then if we talk of medium-term finance, so the money which is required for a period of more than 1 year but up to 5 years. Say for example, for modernization and renovation of the business entity, or maybe to run some special promotional program, you may need funds for medium term. Now, the sources from where you can raise medium-term finance may include borrowings from commercial banks, from public deposits, from lease financing, and sometimes you may also raise funds from financial institutions. Then, coming over to the long-term finance, if you are in need to raise money or funds for a period of more than 5 years, maybe to purchase your land or building or to finance the purchasing of some plant and machinery, the funds which are needed are called long-term funds or long-term finance, and these funds or sources can be raised from shares and debentures, or from long-term borrowings, or from debentures. Now coming over to the next classification or the other type of classification of business finance, which is on the basis of ownership. On the basis of ownership, funds can be of two types. They can either be owners' own funds or they can be borrowed funds. So as the name itself indicates, that owners' funds are the funds which are raised by the owners from internal sources. For example, if it is a sole trade business or it is a partnership business, then the funds are raised by these partners or by the sole trader, If it is a company form of business organization, funds are raised by the shareholders, maybe in the form of equity shares or in the form of retained earnings. But when funds are not raised from internal sources and organization resorts to external borrowings, then it is called borrowed fund. For example, if you issue debentures or you raise money from public deposits or you borrow loan from a funding institution, all these are examples of borrowed funds. Then starting with the sources of finance, we have multiple and many sources of finance. So starting with the first source of finance, which is retained earning. Now what is retained earnings? Retained earning is that portion of profit which is not distributed as dividend to the shareholders. Rather, this profit is retained by the company so that this can be used in future. Now question is, since the money is not taken from any external source, does it involve any cost? Answer is yes. Even the retained earnings involve cost in the form of opportunity cost. So even if the amount is not paid in terms of cost to external parties, shareholders expect from the company that the company is earning at least a minimum return on this retained amount. If we talk of the merits and limitations of the retained earning, then firstly it is a permanent source of funds because it is available internally to the organization. Then it does not involve any explicit payment of the cost in the form of interest, dividend or any other flotation cost. Then because funds are generated internally, they offer more flexibility and freedom to the business organization. Talking of the limitations, because the profit is not distributed in the form of a dividend and it is retained by the business organization, this situation may result into some sort of dissatisfaction to the shareholders as they expect to get some dividend from the company when they hand over their funds to the business organization. Then the second source of finance is trade credit. Trade credit is the credit which is extended by one trader to another for purchase of goods and services. And it is usually granted to those customers, those who have reasonable amount of financial standing and goodwill in the market. Trade credit facilities provide an opportunity to the debtors or to the buyers to purchase supplies without making immediate payment to the supplier. If we talk of the merits and limitations of trade credit, then firstly it is a convenient and a comparatively continuous source of fund and it is readily available. As long as the customer is known to the seller, has some valid degree of credit worthiness, the supplier usually do not hesitate to provide or to extend trade credit. And also trade credit does not create any charge against the assets of the firm. If we talk of the limitations, so there is a cap on the amount which can be supplied by the supplier to the customer. So the funds which can be generated through trade credit is usually the funds are limited, and in comparison to some other sources of raising money, sometimes trade credit may prove to be costlier. Then coming over to the next source of finance, which is factoring, which can be understood in the form of an intermediary. So what happens is that business organizations can take advance money from the bank, which in this case is known as factor, against the amount which they have to realize from their debtors. And the factor or the bank does not only offer the service which includes discounting of bills and collection of clients' debts, but also provide extensive information about the credit worthiness of the prospective clients to the business organization. Talking about the merits of factoring, so first and the foremost merit of the source of business finance factoring is that it can be used to obtain cheaper funds in comparison to the bank credit. Then the cash flow which is generated by factoring is somewhat smooth and is able and can be used to meet the liabilities promptly of the business organization. Then factoring does not create any particular charge against these assets of the organization. If we talk of the limitations of factoring, then firstly it is expensive because if the invoices are numerous and amounts are smaller, it becomes comparatively hectier even for the factor to collect the funds. Then the advance which is provided by the factor firm is generally available at a higher interest rate if we compare it with the interest rate which is usually charged from other sources. Then because factor or bank is a third party, so your customers may not be very comfortable in dealing with the third party because they wanted to deal with you. Then coming over to the next source of finance, which is lease financing. So lease is actually an agreement between the lessor and lessee, wherein the one party known as lessor or the owner of the asset grants certain rights of usage of the property to the lessee in return for a periodic payment which is called the rental income or the lease rental. And throughout the period of the lease, the asset stays in the custody of the lessee, but as soon as the lease comes to an end, the asset goes back to the lessor. Now, if we talk of the merits of the system of lease financing, so firstly, it enables the lessee, the party who takes the asset, to acquire the asset with a lower investment, because now the asset can be acquired only against the payment of lease rental and the amount of the cost of the asset needs not to be paid. Then the rentals which are paid by the lessee are tax deductible while computing the profits of the company or of the organization. Then it also provides a finance without diluting the ownership or control of the business, because you are not issuing equity shares or some other form of management rights to the lessor, so you keep your ownership intact. Also, the risk of obsolescence is borne by the lessor, so if the asset gets obsolete or old, that risk is borne by the lessor and not by the lessee. If we talk of the limitations of this source of lease financing, then firstly, because the asset is rented and is taken on hire, the lessee is not allowed to make changes or any alteration or modification in the assets. Then, if after the expiry of the lease period, the lessor says no to renew the lease, then this may impact the normal business operations of the lessee. Also, despite of making payments of lease rental for a number of years, the lessee never becomes the owner of the asset. Then we have the next source of finance as public deposits. So, public deposits means the deposits which are raised by the organizations directly from the public. Now, under this method, what companies can do is that these companies can raise funds by inviting their shareholders, their own employees, or the general public to deposit their savings with the company. And in order to attract these prospective depositors, companies or organizations usually offer a higher rate of interest than the rates which are offered by the banks. If we talk of the merits of public deposits, then comparatively simpler and easier method of raising deposits from the public, and then these public deposits do not create any charge against any asset of the organization. Then the cost of borrowing of public deposits is cheaper than the cost of borrowing from commercial banks or from financial institutions for the business organization. And since depositors do not get any equity share in the company, if we are talking of company form of business organization, there is no dilution of control or management of the business organization. If we talk of limitations of public deposit, then the first and the foremost limitation of this source of finance, public deposit, is that new companies may find it slightly difficult to raise money through public deposits. Reason being, companies which have a very strong standing in the market and are known to the public, they are in a position to influence the public more, and they are in a position to attract the deposits from the public. Then coming over to the next source of finance, which is commercial papers, which is an unsecured promissory note and is issued by a firm to raise funds for a short duration of time, and this may vary from 90 days to 364 days. Also, the amount which is raised by commercial papers is generally very large, and as the debt is totally unsecured, only the firms, again having good credit rating in the market, can issue the commercial papers to raise funds from the market. Now, if we talk of the merits of the commercial paper, then the first merit is that these papers are sold as unsecured instrument and therefore does not contain any restrictive conditions. Also, these instruments are freely transferable, which makes them highly liquid. Also, commercial paper provides a continuous source of fund and can be tailor made to suit the requirement of the issuing firm also. If we talk of the limitations of commercial papers, then firstly, companies having high credit worthiness and financially sound companies can only raise money through commercial papers, and the size of money that can be raised through commercial papers is limited to the amount of the excess liquidity which is available with the supplier of the fund. So if the supplier of the fund has excess liquidity, he or she or it may be willing to give that liquidity only against the commercial papers. And with this, part 1 of the topic sources of business finance of the subject business study comes to an end. Thank you so much for watching and staying with us. Have a great day ahead.